Hi everybody and welcome to Crypto Channel, the channel for crypto traders. Basically I have a channel already in French and I'm starting this channel in English so we can converse with all the rest of the world. The idea here is that today is going to be the Jackson Hole speech from Jerome Powell. Is Jerome Powell going to give us something that is going to be hawkish, dovish, or something in the middle? This is the question we're going to ask today. And where is the liquidities? Where could the liquidity bring us? Where the volatility could get us to? Is the question of the day. Let's start with the intro and then we're going to start the analysis. So, let's go on splitting the screen. Well, the idea here is that we had this big drop lately, but this big drop was really bought straight away. You see this spike here, and this was bought straight away by obviously some people who has a good wallet, good money, you know. The idea here is also that since then everything that is up to 25,800 is bought as well. So that's quite interesting to see that this drop that was there and the spike is about 10% when you look at the derivative markets, but when you look at the spot, you see we didn't make a lower low here. And the spike is only 6%. So we can really analyze this as a movement of liquidity. We are here on Bybit. And don't hesitate to go in the channel and to find the Bybit affiliate link that we have for the channel if you want to open an account on Bybit, Bitget or Qcoin, which are the free partners of our channel. Well, so the idea here is probably there is like big wallets that are coming in on the long position. The point we made before is there is still liquidity hanging out around the 32s, and now some new liquidity is happening to be around the 29, and the very fresh liquidity is in that box between, let's say, the price now and 26,800. When you have a big drop like this, I usually like to take a Fibonacci and look at where are the or it's going to be the 0.236, which is this point, and obviously this is where we are heading now, and the 0.618 and this is going to give you a range, you know. If I show you some other spikes like this, you will see that very often the price is whether between the 0.382 and the 0.786 or the two places which I told you, which is 0.618 and 0.236. So I'm waiting at the moment for something to happen between these two lines, okay? Which means we could have today or tomorrow, whatever, we're going to see about Jackson Hole here. Where is the fresh liquidity? Is going to be really an analysis for the next 12 hours. But in the daily, I think it's quite encouraging to try to get anything that present to ourselves as a long in this box. Okay, when you drop behind these liquidity boxes here, it's you take the liquidity of the retails, and basically the institution are defending some positions to get down. So they need your contracts here when you get liquidated to rebuy bigger longs. If they were to do this like market or without defending any position that they opened before, there would be a problem on the price because let's say the position will be too high. It will like really bring the price too high, and for them it's not interesting. It's more interesting to do this kind of ranges like this, for example, to set to accumulate, for example, here position on the top of that, and then they drop the price significantly. What we saw here as well is, for example, I think it was on this spike, a lot of taker order. Taker means you don't mind about entering limit, you enter market. So you like push, really give a big push to your positions to get higher, and then you get finally opening position the other side, and then you have this significant drop. So at the moment, I would say the money is more under the money talking not about the liquidity, but where the price could be defended significantly, is not higher, it's lower to the price. So I would really rather try to play some longs in this place than play short. Anyway, we are going to now have a look at Ethereum. Ethereum, you get the same kind of thing. If you see, Ethereum never really cleaned all the short position, all the short stop losses that you have on this structure. Okay, so what's interesting about Ethereum is if you have a trend changing, okay, you could see basically really higher highs, because the short squeeze that could be made here is more significant than Bitcoin. Bitcoin really went to a little bit clean here, little bit clean here. Ethereum never did that. Ethereum is really something that is out cleaned, about over shorted, if you prefer. So that's interesting. Ethereum made a lower low here, so the trend is on the daily is basically going down, but this kind of trend is quite bullish. You know, if you are a trader, that this kind of trend could be a bullish setup. For example, lately we had the same kind of trend, which sometimes people can call a bull flag, which is finally you accumulate stop losses of shorters, and then you get the short squeeze to get back finally upper than this structure. So what I'm waiting on Ethereum is probably at some point to stop getting this lower lows and lower highs, and to just like break through the structure. The first, let's say, taking profit point will be the highest of the structure, and some of the traders that are using chartism can take the whole pole of the flag to bring it upstairs, which could bring us to somewhere between 3,000, yeah, around 3,000 on Ethereum is the biggest target, let's say. But I would rather play just the top of the structure already, which is we short squeezed everybody that was there. Okay, there is a lot of stop losses and a lot of point of liquidity that could be on the target for Ethereum to go straight higher. The question on Ethereum really is, are we going to keep this accumulation, which is there, you see? Are we going to be able to keep it, you see, these lows? And are we going to be able to continue a weekly trend, which is upside? Okay, that's the real question. If we lose this accumulation, which is the trend that you see here, I'm not waiting anything for Ethereum except going back in this zone. It's the same thing about Bitcoin actually, and now we did the whole technical stuff, you know what I mean? Like, but about Bitcoin, if you look, let's take here, we had aggressive trend that was here, okay, here really, and we came down to the less aggressive one. All right, if you look, we lost something here. We lost this accumulation, and then you see this accumulation is laying down. Step by step, it's laying down. Are we going to go straight to this where the price is as this pivot, which is common between the two lines? Are we going to go there, or are we going to just hang to this less aggressive accumulation? It's a little bit the question at the moment. But I would rather see here play long and try to get this 29 at least, than just play short and try to go further. The fact the price delivered so fast here gives you some kind of imbalance that could be treated again. And you see it was also the case here. So you've got one imbalanced, which is further balanced by another imbalance. So here there is a possibility that finally what we're going to do, and this is called a Bart-Simpson, I think you know this structure if you are trading, that we could do the opposite, which is an inverted Bart-Simpson. The other side, go the other side and do exactly the same thing. So you use an imbalance to stretch back another imbalance, and the other way. So that's what I'm looking at the moment on Bitcoin and Ethereum. I would also like to show you the total free, which is actually all the altcoins, all the crypto market without Bitcoin and Ethereum. We had something interesting happening on the total free. It's that this distribution here, the trend that you see here, was somewhere broken by the price. But finally, we cannot get out of this, you know what I mean? We are still sticking to this trend, and we are still like kind of skiing down this slope, which is not a good reaction. You will wait when this trend is breaking to have really a nice upside on the altcoins, which you don't have at the moment. But the structure is quite bullish as well. You see, we are fighting with this trend not to get back through it. You see, this was the low on the altcoins. This was the second recent low that we had on the altcoins as well. The big resistance is here around 400 billions. The real question here is now, are we going to really have this upside when we really break this trend? You understand that we work here in a logarithmic scale, and we work with something that is not accurate because it's very old in time. You see, if I just change this distribution to another high here, if I can do it, yeah. Well, you see, we are under. It was just a touch, you see over there. So the big question is really here in terms of altcoins, which is the pain over with this kind of, you see this wedge here, and is the pain over, and are we going to break through, or is the pain going to continue? Usually when you do this kind of wedge, you have something between 1, 2, 3, 4, 5, for example. It's always kind of sort of 3 waves sometimes, but mostly 5 waves. And so you see, I just changed here a little bit my trend, and it's the problem with the logarithmic scale and very long amount of time. So was the bottom found here? Are we gonna break through this trend? For the moment, I'm gonna stick to the first analysis, which was we are sloping on it, but we refuse to really get a breakthrough. We need a news, we need something really important to do that. I really like to also look at the stablecoin dominance. Stablecoin dominance, if you look, this is including all the stablecoins pretty much. If you want, I can give you the formula. But the idea is we are in this ascending channel on the stablecoin dominance. The big question here is, so basically when the stablecoin dominance is down to this channel, it's a bull market. When the stablecoin dominance is up to this channel, this is a bear market. Okay, here we have a little bit of a deviation out of the channel, but we had here some kind of bear market. This was the lows of the 15th. This was the lows of we had the 2 lows, it was 17, something like that. Well, the idea is the bull market over here? Are we going to find here a structure like this kind of W, for example, which is going to tell us where we are on this kind of point where finally we get higher? You see, this is 21 here. I think it was exactly the end when we were at $69,000 here, and this was the higher lows of the 2020, the ATH of 2021. This was down in the summer of 2021. There was a big drop at $30,000 at this point. So what you can see here is the canal of adoption of basically the stable coins. And the idea here is, did we draw? And it's exactly the same idea with trends that you taking a very long time. Did we draw it well? You know what I mean? Like, is maybe the channel is somewhere here, you see, over there, for example, or right here. So we touch here a bottom, which was, okay, 32 was the top of this correction. 32 was the top of this correction. Now we head back to, I don't know, 28% of stablecoin dominance, and that's it. It's going to be some kind of game over. We go back to the lower lows, and we get down to it. You have to understand that the trader always take into account many kind of different positioning on what he's looking at. You are going to have a trend, you are going to have to get some scenarios. The question is not, is your scenario right? The question is the way you execute your trade. The question is the way you are going to get into that, and you are going to de-risk your position as fast as possible and let a piece of your position which you can sit on. The position can be like very long in time, is gonna help you through the whole year to simply get money out of it. Ethereum versus Bitcoin. Well, interesting, very interesting charts. It's always over interesting to look at Ethereum versus Bitcoin. What did we lose here? Because it's the same. If you look at the chart, we lost something. Well, you get a trend here that is very important. We are going to go to 3 days, for example. It's going to be better, I think. Yeah. You've got a trend on Ethereum versus Bitcoin, which is interesting, and it's since 2019. You see it, you can even draw it there, actually, 2016. You've got something that is really not aggressive, which is here, which we can go to, you understand, like here the price could like go there, and if it's not losing it, it's all right. And you have something more aggressive in the weekly time frame, which was starting in 2019 here. Okay, we just lost it basically. You see, you have deviation, it's okay, we accepted the deviations here, and if Ethereum is not gaining momentum versus Bitcoin, and that we don't get back to this weekly aggressive place, I would rather say that we are going to retest this one. Okay, Ethereum, it's quite normal that it's in a good momentum versus Bitcoin, because it's always been so, kind of. You understand? If you see the charts here, there is very interesting pattern here. For example, you can see some kind of ascending triangle here with this kind of resistance that we never really pass through, you know, you understand, and it's going to give you very nice targets, like one Ethereum is about 0.40 Bitcoins, but we never went through it. That's the first thing, ascending triangle. Some people could see some kind of inverted head and shoulders, for example. It's the same target, so that's okay. And some people could see a cup and handle here, which is the same target, so it's okay. But we never broke through it. So are the actual levels going to help us to break through it, or is just Ethereum done with its hype, and is the price of Ethereum never go to 0.40 Bitcoin? That's a very good question to ask. You know, you always need to say, well, a resistance is a resistance. Maybe we're never going to go through it, or maybe we just have to retest another level down that is going to help us. For example, you have a very nice level here. You have a very nice level here, sorry. That could just like, that's where the price could go. But of course, the problem at the moment is Ethereum is not in a very good momentum versus Bitcoin. You see the Bitcoin dominance is rising. Well, actually it's been rising for a while, and now it's little bit calming down, but that's quite interesting to watch. We're gonna now look a little bit at the fundamentals and the news. I'm not going to talk about Prigozhin. We don't really give a fuck in there, but we don't really give here. This is accumulation of one big wallet that could probably, sorry it's in French, but could probably be Robinhood. Not very interesting as well. For me, it's more like people from Robinhood that where their account has been consolidated on the same address, so I'm not really interested into that. Ripple community, which says that they are okay to go to trial sometime in the second quarter of 2024, so that's interesting. You know, the SEC did actually appeal on the trial. JP Morgan sees limited downside for crypto markets over the near term. Well, that's the same, you know. It could be like JP Morgan people having interest to say this just to actually keep the price up, and they could be in a way kind of be distributing their bitcoins. So be very, very circumspect about all the news that you see about these big players, because they sometimes can be tricky. Not anything to look at into the other news here. The BRICS could take some ethic point into AI. The interesting news for me today is today you're gonna get at 10 o'clock Eastern time, you're gonna get the speech of Jackson Hole of Jerome Powell. Jerome Powell last year made a speech that was terribly hawkish, and that just dumped the market quite strongly, because he said basically we are going to fight inflation until it gets back to 2%, but he did it in a manner of way, and in the way he was talking was really, really, really hawkish. Is he going to make the same thing this year? Well, the market they have a kind of memory. So the first idea you will have to have is, well, maybe he could, but or at least the market are fearing they are really into FUD. fear, uncertainty, and doubt about what this market is about what Jerome Powell is going to say. That's the first thing. The second thing is a lot of analysts says, well, it could be in the middle this time because, of course, you have first the interest rates. They are like extremely high, which is dumping, of course, the real estate market. And all of these things. Also, the stock market is not doing so well, -6% since the top now. And normally, Jerome Powell does not really care about that, but he's supposed to look. There will be elections in America in just 1 year from now, or something like that, and he's gonna have to say we're gonna account what he was doing and everything. So that is the first question. The second question is we know already that the minutes of the Fed that was produced last week totally dumped the market as well. Why? Because they talked a lot during this meeting about the idea that the Fed will have to raise hikes more. Why this idea is quite important and why it is a possibility. Well, if I show you here let's say the curve of inflation in America, and here I made this stuff where I put core CPI in one side, core CPI, and the headline CPI on the top, and this is, let's say, food and energy. If you look from the top and until now, mainly what has been correcting is food and energy. Why? Because the market is saying we go into recession. So we're gonna sell less petrol and we're gonna sell less food. And the idea of the market here is this is kind of imported deflation, more than deflation in America, or let's say disinflation. This is imported deflation that they are doing here. And the idea of because now there is a geopolitical context, which is the BRICS, which own, and you see that this week the BRICS, they let into Egypt, I think it was Iran, it was Saudi Arabia, and it was Emirates. So basically, big producers of petrol, maybe not really for Egypt, but for the rest, it's like big producer of petrol. So the idea is maybe we are in this kind of situation as we were in kind of 73, 78, where we headed into 10% inflation, got lower to like 3, 4%, and then just 1 year after, we were again at a 10% inflation. American economy is very strong, yes, but I mean, there is a good labor market and everything and all of that. So there is probably a confidence that a slow, soft landing could be made. Well, let's see and let's really analyze whether the inflation could go back up because of a supply shock on petrol. It's very important to have this idea into mind that this could be a possibility, which would say, well, even though we have very high rates, anyway, we cannot fight any inflation that we are going to import back. So these negative numbers could become very positive because of the possibility of a soft landing. So the market is going to price, well, there will be more and more petrol needed because finally we didn't do the recession that was into the planning, into the schedule. That's the first thing. The second thing is also, well, maybe we just postponed this recession to next year. And if you're going to see the inflation coming back up and that we postpone the problem, we will still be at very high rates. And we could face a problem where, like Paul Volcker did in the 80s, which was, well, we need the rates to be at 20%, for example. What is the other problem? You could do this in the 80s. I think I have the interest rates here. You could do this in the 80s. It was about there. Sorry. You could do this in the 80s. Why? Because you didn't have any big debt at this time. Let's say you had debts, but it was not like crazy. And things went crazy when things went crazy 2-3 years ago when really at some moment the service of the debt became too important. So what you have to look at is also the maturity of the biggest bonds that was taken, the treasury bills that were taken, when they will actually finish, and when they will have to service the debt again, and when they will have to get back into the maturity of these bills. So every new debt now in America is paid at some interest that is way more important than they can service, which is very important. So the system as it's made here has to go back to low interest rates, or something is going to break. Confidence actually is going to break into, very simply, into the American system to produce debt. How do Americans produce and service their debt? Mainly thanks to the dollar. If you want, the dollar normally is, you have a trade. You trade, your country is, for example, selling something to other country and is buying something from other countries. You have some kind of benefits out of this, which increase the value of your own money. At the moment, for example, Saudi Arabia is selling to another country using the dollar, because this is the standard. And you see that with the BRICS, and we might get out of that thing. And the idea that if I am Saudi Arabia and I sell petrol to India, I can be paid in rupees is quite new. But the idea also that your geopolitics, before you had to own some American debt, so dollars, you had to own some of it, it's been lost actually. When it's been lost, when Russia invaded Ukraine, and that America said, well, your dollars is not your dollars anymore. This is the moment where everything flipped, you understand? This is the moment where everything got absolutely, could get absolutely mad. So imported deflation might stop at some point, and also in another way you could see really a scenario happened like we had in the 73 and 78, and where Mr. Volcker had the guts and had the, let's say, had the guts to stop and to say, well, we go to 20%. But this is not possible anymore, in my opinion. You cannot go to 20% and stay there for quite a long time. At the moment, the debt is so important that you cannot do that. Well, anyway, it was quite long about the news, but you see, we developed quite a lot of ideas into this analysis. We now go to the liquidity. Liquidity, 70 millions liquidated yesterday. What is liquidation? Is basically you leverage and you do a trade, and you can win on the upside, but you can lose a lot on the downside, and your collateral is going to be taken out quite fastly. You know about this. I think if you're traders, you already know about all of this mechanism. 30 million being liquidated on Bitcoin and Ethereum, and mainly longs, so that's interesting to see as well. Half of it, which is quite the standard. The order book is quite empty on the top. Nobody is really selling since this big drop. You see a lot of Bitcoin here, they change hands on this big slope, and now you see a lot of people want to buy. You see all of these orders that happen to be made on the spot. So it's quite interesting to see we are in the buying momentum. Even though the price is going down, it's more a buying momentum than a selling momentum at the moment. Options we're not going to look today. I'm just going to show you all the levels that could be visited in terms of funding rate and everything. I'm not going to spend too much time on this. I'm going to explain in other videos what is the funding rate, the way it works and everything, the way you can use it. But basically, when you see the price going up and the funding going down, and that you see the numbers of contracts going up, you can say a level is shorted. All of this place is shorted. So we showed now here where are the shorted points and where are the longed ones. I am expecting today the liquidity, for example, to go between 25 25,800 and 26,800 on the Jerome Powell speech before and after. I don't know the direction, but I can guess. I can have some places that are going to tell me it's the upside. I'm not sure about that, but the way I do it is kind of like I see, for example, this distribution is probably being broken through. I see this aggressivity is being broken as well, which is telling me, well, maybe it's going to be the upside first. You can also always draw a triangle in the 5 minutes and make up your mind depending on where the price is breaking first or out. I love these triangles. I use them all the time because they really tell you what's going to happen before it happens. Okay, so use your trends, use your mind to get a plan that is interesting about that. We're gonna go straight on iLock. Still about Bitcoin. Alors, Bitcoin, what you see. I say alors because you understood I'm French. I speak Franglish. You get my accent. Well, there is a liquidity box here, which is quite fresh. You see it. It's over there where there is a lot of orange here. You can say 25,500 could be revisited, but we already closed a lot of these longs into this movement. You see the delta here. This is how many longs versus how many shorts in the last 5 days. You see the delta went down. A lot of positions were open in this zone since, let's say, this morning. 24, no, it was yesterday's night. So I see the upside more than the downside personally. 27 could be the box we visit next. We're not going to do Ethereum on this. We're just going to stick to Bitcoin. And let's have a look at the liquidity map of the last 12 hours. You see the sentiment is more shorting. So that's interesting too, which tells me also maybe the upside is the right way to go first. On the 7 days, I love the 7 days. I use it all the time. Well, you have to say, yeah, there's been a short in the last 12 hours. This is what we see here. But some box has been built in the last 2 days in this area, which is between 25,800 and 25,400. So maybe your point of entry is more in this box to get finally the goal of the day, let's say, which is 27,200. I will work it like that, which is fresh liquidity could be taken, maybe a bit lower, and you have to defend your position until 25. You can make an entry here, for example, let's say level 50, leverage 50. You only put 1% of your whole capital into that, which means you trade actually with half of your capital on this trade, and you de-risk quite fast, which is when the price is taking, for example, 2%, you straight away get out half of your position. That's the right way to do. You already will have a benefit, and you can let the runner go wherever you want it to go. But let's not play the 29 yet, in my opinion. Let's play something, one entry more around there, in this box like here, which is quite fresh as well. One entry in this box, maybe defend it until 25, so you're gonna have to put more money to avoid being liquidated, so you're gonna enter down. Maybe at this point you're gonna get into a position where you're in position at 2% to 2.5%, 3%, level 50, and then you wait just for the 2% upside to happen, and you liquidate, you sell half of your position. That's the way I will do for today. That's the way I would take it on a day where probably the volatility is going to be quite interesting. So I hope you like this video. It's been a 33 minutes video. I will try to stick to 25, but we already, you see, we talked about the bricks and everything. We talked about a lot of things. This is really a try for this channel, obviously. Normally this channel is 100% in French, and I'm trying to get the English people to watch it. So the best way was to use my Franglish and use my guts to start to do it. So put a like, because this is not easy, not talking your own language all the time, and also you can see the channel is very young, so put a like, and if you really like these videos, continue to follow me and to get the bell and to get yourself following the channel, of course. I also have a Twitter and all of that thing, but we're going to speak about that in other videos. I have a Discord channel. I have a lot of things like that, but at the moment I'm just like dipping my toe to see if maybe English talking channel talking about liquidity, because this is what we talk about, talking about liquidity and talking about strategic news, geopolitics, and of course Bitcoin could be interesting for English talking people. Well, have fun, see you tomorrow. I hope you liked the video, and see you later.